look at indicators like housing starts, like PMIs, like investment activity, and it has historically provided a good leading signal of where growth should be going. And you can see from a global perspective on the left-hand side, or when we break down across US, China, and rest of the world, we're seeing these rebounding signals. And the scale here is Z-scored. It's just simply saying if the signal is above zero, we're expecting an above-trend period. We're expecting a rebound in growth. Now, this modeling is showing quite sharp V-shaped recoveries. Whether this translates as quickly into real GDP, I think is yet to be seen. But the signaling is certainly pointing to this good and positive rebound. And that gives us conviction that we can take risk in credit, in assets that will respond well to that rebound in economic growth. And that also includes emerging markets. The central bank asset purchases can really be brought to life when we look at the speed and the total level of balance sheet expansion that has been happening, particularly across the G4 central banking sphere. And on the right-hand side, we can see how corporate purchases have become huge in Europe from the ECB. They've not been anywhere near as large in the US, but the Federal Reserve has at least shown its hand, shown that it can come and buy on the secondary and primary market in corporate credit to support this asset class. And the same in other smaller economies as well, be it the UK, be it Sweden and Japan. There are corporate purchase programs everywhere that are now targeting corporate bonds. So with this backdrop, we're very happy or comfortable to own spread risk. It's a question of where do we want that across high yield, across investment grade, across EM, hard currency, sovereign spreads, given the valuation backdrop. So in terms of strategies that we're actually engaging with in the portfolio today and that we have been in the last few months, given all those themes that I've expressed, a US yield curve steepener being underweight or being short 30-year treasuries, being overweight 5-year or 2 to 5 year, the front end that the Fed is still controlling, can definitely be a good way to express this reflationary recovery theme. And this has been additive to the portfolio so far. We certainly think this curve slope can continue to steepen in future.
安聯投資